Hello everyone, hope we're all well. So in this video, we're going to be talking of how you can effectively and at the same time efficiently use trend lines to make sure that you are consistent in the market, okay? Me personally, I'm not a very big fan of trend lines. I've mentioned that several times, but I'm going to show you the correct way how to do it. And in this video, I'm going to incorporate top-down analysis using the trend lines. And what is not very unique or what you're going to find advantage is that I'm going to use exactly patterns that I've ever shared on this very channel here. If you trade synthetics, you can go back to around the end, between around November 2023, you can remember properly. We talked about the volatility 75, that it was going to drop until where it is dropping currently. Of course, we had some targets here and there, but where it started from here, when volatility 75 was still at 500,000, it's where it all started. Okay, I'm not sure to you how we got it, but this time around we're going to be using the pattern. That time I only shared with you that there was a trend line here. Okay, I did not take you through the deep mechanics of it. Okay, so if you don't have a synthetic account, make sure you get an account. I'm going to leave a link there, but you can start with a demo. These things are very volatile, and the advantage is that they operate 24/7. So get yourself a synthetic account. The link is going to be in the description or the pinned comment. Okay, so now we're going to use two examples, this one that we did in 2023 and the current one that is happening. Okay, and also all of them were shared. You can just check through the previous synthetic videos or the breakdowns that we did and you'll see them. So as usual, we have learned how to draw trend lines. It's the knowledge we are going to apply. We start by the first touch point or applying the highest touch point, which is this one here. Okay, so this is our first area. The second one, we're cutting through as many weeks as possible. Remember, I told you guys not to use the top of the week. Okay, I know it's what you guys want. You want accuracy and the rest, but the market is not perfect. The market itself is not perfect. Okay, so we have our first touch point. We have our second touch point. First touch point, make sure it's the highest or the lowest. Here, since it is a resistance, we're using the highest. If it was a support, we'll be using the lowest. Okay, so we're using the highest. The second touch point, cut through as many weeks as possible. Here we have 2 weeks, so we have to cut through the weeks, not the bodies. Should not cut the bodies. If there are many weeks and you want to pass through as many as possible and you see that you're going to be cutting the bodies, add just the weeks. Okay, then this is the third touch. Okay, so now we're interested in this third touch here to utilize this trend line. So what are we going to use? So since we're in weekly, this is our swing time frame, structure time frame. Okay, so we have to do a top-down analysis on it. Okay, so since our structure time frame has touched here on the third touch, what are we going to do? We're going to check daily. Does daily agree with us that actually this is a what? Does it agree with us that this is a third touch also? When you come to daily, you can clearly see the trend line. We have our first touch here, second touch, third. If you want, you can slightly adjust it, but we drew ours just almost perfectly, and still we have the third touch here. Now, both weekly and daily are telling us that we're on the third touch. Now, the next thing we're going to add is we're going to add in some levels of support and resistance. Okay, for example, when the market was coming to make the third touch, the market was trending upwards. So we have to identify before this touch, there are some levels, hidden structures, previous support levels, previous resistance levels that we have to identify. So you can see here we had an impulsive move. So before that impulse, the market gave us this level here. Okay, I'm just going to change the color to my favorite daily colors. We have that. Then also, before reaching that peak, we had the market giving us a certain hidden structure here. Okay, so perfect. We have identified the levels that we want in daily. So now, why are we doing this? We're doing this so that we can identify multiple levels of target, multiple levels of threats, multiple levels you can use for re-entries. Okay, yes, we have a third touch here, which weekly and daily agree on, but also now we have to identify target. So we have this target, we have this target. Now, what is next is to go to the third time frame that we are going to be using for. You can use it for entry, or you can use it for the pre-entry, meaning that if you're going to use H4 for pre-entry, meaning that you're going to be taking your trades on H1. So we started from weekly, daily is agreeing. We've just added in some levels in daily, and also we're going to add in some levels in H4 to identify where exactly the market changed trend from. Okay, so you can clearly observe, if you can see clearly here, this is where, let me just increase the candlestick. As the market was approaching from here, okay, we can clearly observe that the market was trending higher, making, let me just adjust this so that we can change the color also here. Higher high, higher low. Okay, So now we want to identify where we're going to take our trade from. Okay, remember all this, we have this on our trade. Just check the synthetic video we posted around November 23rd of November, not 23rd, but I mean 2023. This is the exact breakdown that we did. I'm showing you exactly how you can use Trendlines. I know you've had people saying Trendlines do not work, Trendlines are not reliable. The Trendlines are reliable unless you're not using them correctly, okay? So the market created higher high, tested this level here. You can see this is a very strong level, but we marked it in daily. And also this is a very strong level, we marked it in daily. So as we're coming down, either we're going to use this as our entry points or we're going to use them as our targets, okay? So let's first mark and identify where the market change trend from. You can see we're still pushing higher, like how we saw in daily, okay? And we had an aggressive push here. So what are we going to do? So this is the last high that the market broke. Then it went further higher, okay? So, sorry, let me just adjust this. So this is the last time that the market gave us this high here, okay? So we have higher high, higher low, higher high, higher low, higher high. So this level here was not tested. The market attempted to come and test it, but the momentum was weak and then pushed, okay? Then the market came and gave us a false breakout here, tested it, pushed and made a lower high. Be careful here, lower high. But now, the market now, what we want is for it, since it's already tested this, we want it to break this level and to break it with a proper break, and then we can have a weak momentum test. If we can have those rules, remember we have, if this is a level, we need the market to break one with an aggressive push, then we have a weak retest, then we can get our entry there, and then we take the trade. Now that's what we're looking for. We want an aggressive break. If not, we want full body breaks so that we can have a weak momentum retest, then we can take our trade. Now, if I take our trade below this level here, like we have identified, since the market has already tested it, if we to take our trade below this level, meaning your first target is going to be this. And if you trade synthetics, you know that this is a very good distance for you. Whether you're doing swing trading or you're doing intraday, it will be a very good target for us, the first target, okay? So someone may be saying, what about where's the second target? Of course, we did not draw another level down. If you want, you can just add another trend line down since it's a third touch. So it's obvious that we are going to have another trend line down here, okay? So you will target there, or you can target other hidden levels here. We can just add there, because we get targets. Someone may be wondering, why are you marking them in bigger time frames? We get our targets in the structure time frame so that we can have a proper risk to reward level, okay? So these are the other levels that you can have. You can see when they're respected there. When you go to daily, they're properly respected. Let me just show you here also in daily. You can see when you come down, the market was properly respecting them. So from here, you target this level. From here, you target this level. From here, you target this one. From here, when it breaks below and comes and retests, then you can target the bottom of that channel. Okay, so this is what I'm calling a channel, this pattern here. The bottom, let me just show you what I mean by its bottom. By bottom, I mean that you can target this level down here, okay, in case we break lower. And you can see that the market was properly respecting that, okay? So we have already set our targets. Let's go back to identifying our change of trend. So H4, we have identified that we need to take the trade below this area here, okay? I want you guys to just follow slowly. First, we started by identifying the trend line in weekly, and we're looking for the third touch. Then we wanted to do a top-down analysis. Is daily agreeing? Since we're at resistance and third touch, is also daily at third touch and resistance. Daily agreed. Now we're coming to H4 to map out how the market was trending upwards, like how we saw in the second structure time from which is daily. Was it also trending upwards? Now H4 is giving us how it was trending upwards, and also it's going to give us the opportunity, or it's going to give us where the market is going to change trend from. And we've identified that the market is changing trend from this area here. Since we came and reacted, first gave us a false breakout, reacted. So now a good break below it, we shall be looking for weak momentum to go down with it, okay? Now, if you're to observe, where did we have a proper momentum break? It is here. We had a proper momentum break here, and then you can see how the market went back. Also went back nicely, trending upwards with weak momentum compared to how it broke down. And you can see we came, tapped into this area, and again went back. To show this level is significant, again, when the market broke down with a full body candle, we retested with engulfing, and then the market melted. Now, from there on, you can see we're just having break, weak retest, push, reacted to this level, aggressive break. We want to see a trending market coming back to that level. It was now following everything like that, okay? So this is how you can use trend lines, just like how you're using levels. Personally, I've been sharing a lot of levels on the channel here, but also you can use trend lines, okay? Of course, some of you also can prefer adding some inside patterns and the rest, but I like making it simple. You can see your chart can be very clean and not complicated, okay? I assume that some people may be watching this video as total beginners. So I want to make it as simple as possible for you. Okay. So if you've not followed along here, this is just the first example. Let's do another one, which has just currently happened. Okay. Now, excuse me. Now again, let's go back to weekly. I'm not going to start from monthly because monthly has it's not what the structure is. We use it just for direction. Another one is just here. We do have the market making lows here, and also you can see the market made a high, low, high, low, high, low, lower high, and then broke down, came on, reacted here, gave us a lower high, and then it has been making lower highs ever since we pushed down here. Also, this breakdown is all on the channel. If it's not on the channel, check our social media handles. We shared all these breakdowns. Okay. So as usual, let's first map out the levels. But of course, the purpose of the video is to talk about trend line. So we can observe clearly we have a trend line around here. Don't worry, we're going to adjust it. Okay. So we can clearly observe we have a trend line around here. Okay. Then also you can clearly observe that we do have a trend line around here. Okay. So we're going to adjust them. Don't someone may be saying, this a trend line is not seen there. You're going to see it properly. So remember, the second step is the structure. We have seen the first structure here. Remember, I'm catering for both swingers and intraday traders. That's why I'm using weekly and daily. So you're also going to H4. You can go further to H1 to refine your entry. Okay. If you're doing intraday, you can go even further to minute 15, minute 30. We have spoken about that several times. If you're not very well familiar, check our videos on uses of time frames. We have 2 to 3 videos. Okay. So let's now drop down to the daily time frame. Okay. Now, when you drop down the daily time frame, what exactly do we observe? Now, we just need to adjust our level. So you can see from here, remember the first rule, touch the highest point. You can see we're touching the highest point. Second touch point, what are we interested in? We're interested in the market cutting, the trend line cutting through as many weeks as possible, but should not cut the candlestick border. So you can see, adjust the first one highest, second one like that, cutting through as many. So you can see it respected and the price came here. Okay, respected it perfectly. This analysis was clearly given to you guys. You can those of you who have been following us in the groups and everywhere, you can comment. And also we had another junction downwards here, down that we did get. First touch point is touching the lowest. So this is a resistance. It was a support here. So when you broke down, it becomes a resistance. So you can see, follow the same rules again. What we observe: first touch point lowest, the second touch point, cut through as many weeks as possible. So here down at 2, we are cutting through as that. Okay. You can see the market came and exactly met at this junction. You can see how aggressive it dropped because such junctions are very strong levels. So weekly and daily are speaking the same thing. So now let's check our first entry time frame, which is H4. What happened in H4 when we touched there? No, when we come to H4 again, what did I say we do? We are going to see in daily, you can see that the market was coming upwards. Okay. But now I want to see the details. How was it approaching upwards? Okay. And it's going to help us to know how it was approaching upwards and also our levels to get change of trend from and the rest. So you can see aggressive, and then started trending, created SW, started trending higher high, higher low, higher high, higher low. Then we changed trend from around there. Okay. Then you can see this pause happen. So let's mark it practically. But before that, let's get our targets as usual. We go back to weekly. Where is going to be our first target? Okay. So when the market did this, we can have a target just here. For those of you who don't want to overbe in the market, we have this target. We just change the color here. Okay. We have that target. Then also we can have this target here, this area. Also we have a W neckline just here. Okay. All these targets, I shared them in those videos of breakdowns. We're just going through over these things that we share. So when sometimes I'm doing breakdowns, I don't explain these things in detail. So let's go to daily and identify some levels that we can be able to see. So when we come to daily, what do we observe again? We have, this is the key area that I was interested in daily personally. You can see the market came and reacted exactly there. And currently we are below it. So since we broke down, we want the market to go and retest it if it can give us a retest. But of course, we have also a hidden structure here. We want to see how the market is. This is now a current, price. Okay. If the price can come and give us an approach here, we again switch to H4 and see how it's approaching. It's not as simple as that. I know it's simple, but it's not easy. It's simple, but not easy. It's not as easy as it is looking here. Okay. But just follow the rules. Draw your levels, let the price tap, go to H4 or your favorite entry time frame. Look at how the market approach so it helps you identify. Personally, I prefer H4 as they didn't have a lot of noise. So we have mapped out our levels and our targets. Let me also add, excuse me. Let's also add, let's just also add one more target, just where the move started from here. Okay. So we are done there. Also daily, perfectly, we agree. Okay. We agree on all that. So we have this target, we have this target, we have this target. Everything is set. Now let's go to H1 identify how actually the market approached this level to give us change of trend until we go to our targets. These are our targets. This is a target, this is a target, this is a target. So when the market came, it gave us a W. So I'm just going to mark that. What happened? It gave us a higher high, higher low. Okay. Then again, gave us higher high. Then it came and reacted, gave us a higher low. So when you extend this like this, these are the levels the market gave us. When it breaks here for scalpers, you can take up to here. And then we went and get a false breakout. We tested this level improperly, but then finally we broke through the last lower high and the market gave us an entry of a bearish engulfing. It hit our first target. After that, we broke through and rejected it with that. Rejected it with that candle, which is a confirmation. If you don't want to take it from there, you can take it from down here until your next target, which is this. When we broke below this target here, you can see we had hidden structure that we tested again until the next one like that. So this is how you use trend lines. Like I said before, there could be patterns inside, but I just want to make it as simple as possible for you so that you're only using the outer structures and change of trend to approach those outer structures using trend lines that we have marked out. Okay. So I hope this has been very, very easy and simple forward for you guys. In case you have any questions, leave it in the comment section, or in case you need to book a session. Some people want mentorship, but what we share here, I don't expect you to need mentorship. What I can really offer is maybe if you can book just a Zoom session to clarify the questions you have. Other than that, I expect you really to organize yourself with the value we have provided on the channel, also on our website. In case you want to book a Zoom session with me, just to clarify your questions on a particular topic, it's the only thing I expect from you, not a whole mentorship and rest, because we really share with you exactly how we do these things. You can compare with the breakdowns we do. There's nothing that we're hiding. Maybe if you just want clarification privately, you can book a Zoom with us, okay? I won't leave the link in the description. That's all. Have a great week.